Executive Director at Nuvama Institutional Equities, joining us. Abneesh, hi. What's your take on some of the FMCG players, especially cigarette stocks like ITC?
Sure, thanks. Good morning. So yes, we are positive on the entire FMCG sector. We are seeing that interest from both DIIs and FIIs is coming back, given there is a sharp sell-off in the IT stocks, and IT is a large sector, so there is some benefit of that. In terms of demand, things are improving for the FMCG sector overall, given the GST rate cut is leading to grammage increase, more affordability. And third, of course, is rural continues to do well. Urban demand also is seeing recovery because inflation is low. Our topics in the FMCG are Nestle, Britannia, Marico, Tata Consumer. Coming to ITC and cigarette sector, our sense is worst is behind, and investors should buy these stocks more from a 1 year kind of a view rather than just 6 months. Worst is behind even from a 6 months perspective, because next 2 months you will see that price hikes keep happening, because cigarette companies like ITC don't take the entire hike at one go because they have such a large portfolio. This time the price hike is also extremely high, so they would like to phase it rather than taking at one go. But I do see that pricing power of ITC is very high. It's a sin sector, it's a habit forming sector, plus clearly ITC has a very strong market share. Even the other players will take the similar price hike. Second is we don't see a sharp volume decline like high single digit, double digit FY27. Some decline will be there. We are building in currently more like 3 to 4% volume decline. But the good thing is the cigarette raw material tobacco is favorable in FY27 because there is a correction. FMCG for ITC is doing very well because most of the FMCG of ITC is foods, noodles, biscuits, snacks. GST is helping there. So I would say that the overall price hike in cigarette, volume dip not as bad as initial fears of the street. FMCG doing well, paper merger is happening. Overall valuation comfort is high, dividend yield is also quite good. So investors should look from 1 year perspective, but in the medium term, we'll prefer Nestle, Britannia, Tata Consumer, Marico over ITC.
Interesting. But Abneesh, like you rightly mentioned, this is a sin segment, it's an addiction segment. While you don't foresee much of a volume impact, what about margins? Because this, I guess, will also sort of take care of the illicit trade.
Yes, good question. My sense is first 1 or 2 quarters, there could be some margin dip in cigarette business. It will be an interplay of two things. One is ITC is not taking entire price hike from day one, but the tax outgo will be from day one. So that's why first quarter there can be some margin pressure in cigarette business. On the other hand, the tobacco raw material for the cigarette is turning favorable. Last 1 year it has been inflationary, but then there has been a correction, and FY27 will see that benefit. So my sense is it will be an interplay and maybe some margin pressure could be there. Second half, I would expect a margin recovery in cigarette business. Coming to illicit, if you see Modi government last 7 years before this tax hike has been quite rational on the cigarette industry, and that led to good volume growth for the legal cigarette players, which is good for the government tax collection also. But after 7 years in a sin sector, this is not something which is logical, because ultimately sin sector is a sin sector. So after 7 years, this development of harsh tax hike happened. So yes, in the near term, illegal cigarettes will gain market share. But ultimately, my sense is next 1-2 years, I would not expect the union government to again see a sharp tax hike in cigarette, because last 7 years is a clear example. And this was also in the backdrop of the GST rate cut in FMCG, auto, and white goods. So government had to make up elsewhere. So from 1 to 2 years, tax policy, there is a stability. Plus, clearly FMCG is doing quite well for ITC.
Abneesh, how do you look at HUL's recent move to invest 2,000 crores for premium BPC products? Is the private labels or private or D2C brands now, reaching a threshold that HUL has to make this move?
No, I think it's a very good development. So clearly 3 things. One is HUL has identified beauty personal care as one of the most important areas of intervention, because clearly the premiumization opportunity there is very large. There is a competition from D2C last 3-4 years, which has impacted the beauty business. If you compare Nykaa's growth and if you compare HUL's beauty growth, there is a gap. Partly Minimalist addresses that. Minimalist, I think, is a great acquisition from HUL. We are picking up very good scale up of Minimalist in terms of the distribution in the Kirana. The advertising is very aggressive. The kind of scale up HUL has done of Oziva, I think that is a template they would like to replicate even for Minimalist. So this is a 2,000 crore capex in the premium beauty and personal care. I think that's a good step, because India clearly is premiumizing in FMCG, and there are D2C companies available for acquisition also. I would expect HUL to do bolt-on acquisition in beauty in the next 1 to 2 years, just like Minimalist. I think they will do more. So I am positive on HUL. The stock has corrected post the Q3. But frankly, Q3 numbers were ahead of my and street expectation. 4% volume growth was not bad. 5.7% sales growth was not bad. In fact, it was a multi-quarter high. And my sense is Q4 and FY27 could see further gradual build-up. So we are positive on HUL. And clearly, the new CEO is very aggressive, and she has identified beauty and personal care as the most important area where premiumization and the capex is going to happen.
Abneesh, hi, this is Harsha. I want to go back to cigarettes. I want to try and understand what gives you the comfort with regard to valuations, because when I'm looking at the 5-year price to earnings of, say, for example, an ITC, even today, the price to earnings ratio is not materially lower than the 5-year average, 1 year forward price to earnings. Now, am I getting something wrong, or is it just the margin contraction which is depressing the 1 year forward valuations? And maybe a couple of years from now, which is FY28, the numbers will look materially different. Is that how one should look at ITC? Is that what's keeping you positive? So that's the first part. The second part, ITC versus others. Do you believe that there is a firm tilt in favor of ITC in terms of preference versus others, in your opinion?
So 3-4 key things. Good question. See, one, of course, is there are multiple things which go into a stock performance. You can't look at just the 3-year, 5-year average. If life was so easy, then everyone could predict which sector, which stock will do well next quarter. Stock is also dependent upon what's happening in other sectors, right? For example, the sell-off in IT sector. IT is a very large sector. So the DII, FII outflow is happening from that sector. And clearly that will go into other large sectors like banking, FMCG. These are large sectors. And clearly there the growth fundamentals are intact. So FMCG, I'll address that first. Clearly, we are seeing interest from FIIs, DIIs coming back after a long time, because clearly in Q3, the results of most of the companies were either ahead of expectation or they met expectation. And generally, commentary on Q4 FY27 is also positive. If you see, Asian Paint also said that they do expect that they'll gain market share. And even in Q4, the demand for paint should be better than Q3, because there was October impact of the rains, which will not be there for paints. HUL also again gave the same better outlook for Q4 and FY27. They said H2 or FY26 will be better than H1. So we are seeing commentary also turn positive. Third, of course, is what happens in ITC's rest of the portfolio. So you can't look at just PE multiple. You'll have to look at how FMCG is doing. FMCG is very large business, very large SOTP of ITC comes from FMCG. Q3, we saw 42% profit growth in FMCG because it's a function of operating leverage. My sense is ITC will see double-digit sales growth even in Q4 in FMCG part of the business. Now coming to comfort on valuation, clearly the stock has corrected from, if you remember, from almost 450, 500 level almost 18 months back to now 330 kind of level. So there is a comfort from an absolute correction. And now at one shot, the stock corrected from 405 level to almost 315 post the tax hike. But tax hike, frankly, medium long term doesn't change the intrinsic value of a cigarette company, because that's a fact of life. Plus, if you see, pricing power is absolute in cigarette industry, right? Because the cigarette industry, entry barriers are very high. So the intrinsic value of a company doesn't change because of the tax hike. Yeah. So I would say that yes, from a 1 to 2 years, do I see ITC going back to 400 plus level? Absolutely, I see. But from a 6 months perspective, my sense is food companies like Nestle, Britannia, even Marico, for example, or Tata Consumer, mostly these are all food companies, I would expect them to grow faster than ITC overall business. That's why I'll be more positive on those four companies. ITC worst is behind, but investors will have to take a 1 to 2 year view rather than just a 6-month view.
Right. Okay. Great to have you on the show. Thank you so much for your time today then. Okay, let's very